So tonight trading is going to be really, really awesome, guys. So for those who have just joined us, I'm double sure you know how we roll. If you are with your pen and paper, please kindly signify that in the chat by typing in something in the chat. I want to be sure you guys are with me. I want to be sure we are on the same page, guys. All right, tonight trading, believe me, we're not going to spend more than between 30 minutes to 45 minutes, but trust me, the information I'm going to share with you today is going to be really, really awesome. Okay, so for those of you who today is your first time you'll be joining our Sunday channel, Sunday trading, I beg your pardon, please type in yes in the chat. Type in yes in the chat, and if you are here to join our YouTube channel, here is our YouTube link. Go there right about now. Go and subscribe to our channel. There you can see a lot of you can learn a lot actually, right? So for those who are watching right on YouTube, who are listening to this lecture on YouTube right now, please ensure you share this with your loved ones, and don't forget to subscribe button so that you can be notified whenever we upload any new content. And we'll be uploading an amazing video very, very soon, as based on a lot of requests we've had from a lot of you guys. All right, so tonight's section is going to be really awesome, as I've said. So today we'll be talking about trade management, as well as exit rule. Okay, you will agree with me that trade management is one of the key aspects of success when it comes to forex trading. And forex trading and online trading generally requires a lot of efforts to be put together, and one of them is to have good trade management knowledge. And if you do not have it, believe me, you are still lacking one of the important things to become a successful forex trader. All right, trade management ensures that you protect your capital, you take your profit at the right time, bank in some profit, etc., etc. And another important aspect of it is to know when to exit a trade. This is another thing a lot of people do not know, most especially the newbie and intermediate. They do not know when is the right time for them to exit a trade, even if you are in loss or you are in profit. They do not know when it is ripe or necessary to call a trade short, either profit or loss. Okay, all that we're going to discuss that tonight, but trust me, the information is going to be really, really beneficial to you guys. All right, and for those of you who are looking for long-term trading, believe me, let me quickly chip in this before we go further. To become a successful, to have your hands on practical in this industry, believe me, you need to stay in the learning for a longer period. That is just the truth. You need to stay in the learning for a longer period. What do I mean by that? By having consistent education on a particular aspect of success. That is what I mean. And very soon we'll be putting up a training that comprises 6-month training, 4-month training minimum. Okay, so this will ensure we have good mentorship during these sections. And during these sessions, you'll be shown how to do it practical, and it's going to go practical all through. All right. So we'll be rolling more. I'm just putting it to you guys so that you guys will know what we have, what we are preparing at the background. So when the time is right, we're going to roll it out for people to see, and for those who are really, really interested to become successful and to learn this for a certain period of time and gain their mastery before leaving the school. All right, that is just what this is all about, guys. So let's go back into today's session. So what are the things we need when it comes to trade management? All right, we've had a section about trade management in the past, several classes, but today's class, uh, I've decided to add exit through to today's class. So this is going to be of help. So what are the things we need, you and I need, and a trader needs to be able to manage a trade profitably? All right, so guys, I want you to take note of these things I'm going to list out to you guys before we go further on how to do that on the chart. Right, the first thing you want to put into consideration when it comes to trade management, the first thing you want to put into consideration is this. The first thing you want to put into consideration is break even. All right, no, sorry, stop loss. Stop loss. All right, stop loss is part of trade management. All right. Number two, the next thing you want to put into consideration is break even. All right, break even. Then the third thing I'm going to talk about is protecting some profit. All right, please keep taking note of this. All right, because I may not have the opportunity to leave this for a very long time. So keep putting this, keep writing it out in your jotter so that you can be able to roll along while I keep listening, while we work on them on the chart. So the next one is trailing stop. The number 4 things you want to consider as part of the trade management is trailing stop. All right. I hope this is getting clearer, guys. So the number 5 thing you want to put into consideration is taking 50% profit of your order. All right. So guys, we still have few orders more, but these are the important ones you want to put into consideration, guys. So when you are able to put all of these, into consideration with trade management, believe me, over time you will keep making profit. All right, if your strategy is good enough, you keep making profit, because forex market is dynamic in nature. Sometimes you predict and you make your analysis, and market will dance to your analysis according to what you really analyze. But sometimes you will see that market will just prove you wrong. But when you have good trade management in place, this ensures that you are able to cut your loss short and also protect some profit and even take some profit at the right time. All right. So now the first one I want to talk about is stop loss. I'm sure you guys, you're not new to trading, right? I believe those of us on a live session right now, you already know what stop loss is all about. But I'll keep talking about stop loss, all right? The first thing you want to do is defining your stop loss, all right? Defining your stop loss. All right, defining your stop loss. You need to know how many pips stop loss you want to use. All right, you need to know how many pips stop loss you want to use before you go into a trade. This is very, very paramount. This is the beginning of trade management. Beginning of trade management starts from stop loss. When you don't have a stop loss in place, it means you are not a good trader. All right. Most especially for the newbie and for the intermediate. All right. Reason why we have stop loss is for us to be able to cut our loss short. Although there are some traders who does not use stop loss, there are some experienced traders which I know who does not use stop loss, right? But when you get to that level, you will know if you have to use stop loss or not. But believe me, in general, it is highly important to use a stop loss. All right, because it's not going to be possible for you and I to stay in front of our system and start and keep monitoring how the chart moves up and down. All right, that is why stop loss is there to protect our loss. All right, so you must be able to define your stop loss to know how many pips stop loss you are using. That is the number one thing, guys. So if you are not been putting that into consideration, you want to start that right from after this class, guys. All right, so the next one we want to I'll talk about right here is break even. What is break even all about? Break even is moving your stop loss from its value to your entry point. Okay. It's changing. Let's actually use changing. Oops, sorry about that. Changing your stop loss from its from changing your stop loss value to your entry points. All right. So break even is changing your stop loss value to your entry point. When is the right time to use this, guys? You can either changing or moving, either of the two. It goes. So the right time to use this is when you are in some profits. All right. Now, let me break it down a little bit more. When you take a trade, you have used 20 pips stop loss, for example, and your target is 50 pips take profit, right? Now, when is the right time to break even? The right time to break even is when you have taken 20 pips profit. Now, remember, 20 pips is your stop loss, right? And your target is 50 pips stop 50 pips take profit. You want to break even when you are in ratio 1:1 or very close to ratio 1:1. So since you are using 20 pips stop loss, once you have about 20 pips you are in 20 pips profit, or you are about 18 pips or 17 pips in profit, you want to move your stop loss from its original number to the entry value. Now, let's say your entry value is this, guys. Let's say your entry value is 1.2222. All right, that is your entry value, and you analyze that market should go up, right? Now your stop loss, let's say your stop loss is 1.2202. All right, now this is 20 pips stop loss. When you take this away from this is 20 pips stop loss. Now you assume that market should go up, and now market is in your favor. Okay, once market is in your favor, in about 20 pips or 18 pips, then you want to change this number. This is your stop loss. Okay, ST, stop loss. You want to change this number to your entry point. Okay, You want to change your stop loss number, then change it to this entry points. I hope this is getting clearer, guys. So that means you have break even. So if you have broken even, means that you are no more risking any amount, which means this particular trade is now risk free. I hope this is clear, guys. If you are with me on the same page, please type in yes, guys. If you are following, type in yes. So once you change your stop loss value to your entry point value, that means you have broken even. Okay, so it's actually means changing your stop loss value to your entry value. So that tells you that that particular trade you are currently taking is now risk-free. So if trade now reverses down to this entry point, okay, then it will hit you out in no loss, no profit. So that is one of the very vital aspects of trade management. So guys, if you guys are with me, please type in yes in the chat. If you're following, type in yes in the chat. All right, thank you so much, James. Thank you so much, Mrs. Eni. All right, Dami, appreciate you for that. Okay, so let's keep moving. Time is not on our side. I hope this is very, very clear, guys. So that is one of the things a lot of people don't, that's one of the things a lot of people don't put into consideration. And this is why you see a lot of people are blowing their accounts in no time. Trade management is one of the key aspects. Now, let's talk about protecting some profits. Protecting some profit. What does this mean? Okay, protecting some profit. This means moving your stop loss above your entry points. All right, moving your stop loss above your entry points, with some pips ahead, also with some pips. Okay, so now let's explain this further. So what is protecting some profit? Oops. Sorry, guys. Okay, so protecting some profit, what do I mean by that, and what does this mean? Now, this is very, very simple. I just made an illustration right now. Let's say you your entry point is this. I'm going to be fast with this, guys. Your entry point, let's say this is your entry point, 1.2222, right? And you assume that price should go up. That is what your strategy says, that price is going up. And now this is your ST, stop loss, 1.2202. Now you can see this is like 20 pips stop loss, right? Now, how can you protect some profit? Let's say your take profit TP is 50 pips, right? 50 pips. Now, if price now shoots up from 2222, moves up in about 20 pips, let's say 20 pips, and price now move from 1.22, let's say 42. All right, now this is 20 pips profit, right? What does protecting some profit means? It means you want to change your stop loss right here, then put it anywhere between 22 and 42. So it means changing your stop loss ahead, putting it ahead of your entry point. All right. Remember, break even is when you move your stop loss to this value, right? This value right here. This is when you move your stop loss to this value for break even. But for protecting some profit means that you want to move this value far ahead of this. All right, probably between here and here, between this your entry and the current price. I hope this is very, very clear, guys. So that is protecting some profit. Now, let's say you now put your you now protect the profit by moving your stop loss to 1.2232. Okay, you can see when you take this one away from this, you have protected 10 pips, and the current price is 10 pips away from your stop loss. So that means if price now retraces back to this number and hits you out in stop loss, it means you have been able to bank in 10 pips profit right here. Okay, that is what protecting some profit means, because we never can tell. Market may keep going up, all right, or reverse. So if market should reverse, then hit you out, you've been able to cash some profit. So you never can tell. Market may keep coming down to this one or even lower. All right. So if you have protected your profit and take some right here, then you can be sure that that profit is now yours. All right. This is very, very similar to trailing stop. All right. It's almost the same thing, but I'm going to buttress more on trailing stop. All right. So if this part is clear to you guys, please type in clear in the chat. Let's move a little bit faster because we still have XT through to also cover as well. So if this is very, very clear, please type in clear in the chat. Type in clear in the chat. Time is not on our side. All right. Thank you so much, James. Sorry, guys, I need to get some water. Okay, so I'm happy this is super clear to you guys. So let's keep moving. Okay. That's fine. Okay, now, so let's talk about trailing stop. So what does trailing stop mean? What does this mean? Trailing stop means moving your stop loss. I'm coming. Sorry, guys, please. Okay, sorry, guys. Okay. Oh, shush. All right, that's fine. I thought that is gone. So we're talking about trailing stop. Okay, so trailing stop means moving your stop loss behind the current price. All right. So it means moving your stop loss behind the current price. So this is there are several ways you can trail your stop. We actually have a video on how to use trailing stop. So there are several ways you can trail your stop. Okay, you may decide that you want to give price 20 pips ahead of your stop loss. So it means if price keep moving in your favor, you will keep changing your stop loss to follow the current price. Okay, giving 20 pips difference between your stop loss and the current price. That is what trailing stop means, until you get to your check profits. Okay, so like I said, this is very, very similar to uh protecting some profit. So let's quickly make a brief explanation on that so you can understand that very well. So trailing stop is this. Let's say you have your entry point is 1.2222. All right. Okay, so now if price is now in price has gone up in 50 pips. All right, price is now at 1.2250. No, sorry, 72, 72. So this is 50 pips difference. Now, if your target is 100 pips, remember you still have your target ahead. Now, this is how trailing stop work. If you decide that you want to use 20 pips difference between the current price, which is this one, and your stop loss, okay, so your stop loss is going to be 1.2252. Okay, so as this one keeps going higher, probably in 10 pips or so, you keep changing this to give the difference of 20 pips between the trailing stop and the current price. I hope this is well explained to you guys. So that is what trailing stop means. So it's very, very similar to protecting some profit. All right, so but that is just a way to explain this better. All right, now the last one I want to talk about right here before we move to exit is taking 50% profit. All right, this is simply this simply means taking half of your profit once price goes in your favor. All right, so this means taking half of your profit once price goes in your favor. It's as simple as that, guys. So now let's say your target is 100 pips. All right, and now you see that price has moved up in 50 pips, but based on your experience or what you've seen, or probably you are okay with some of the profits, and now you have $100 as your profit. Your floating profit is now $100. All right, and your target, based on your target, you are going to hit 200 at the end of your take profit. You are going to hit $200 at the end of your take profit. But now your floating profit is now giving you $100. You don't want to be greedy. As at this point, you want to take half of this $100. Take $50 out, all right, by closing half position of your order. By closing half of your order. So this way, once you close 50% of your current $100 floating profit, then you can be sure that 50% of your current earning has been secured. Your current profit, I beg your pardon, has been secured. Then allowing the remaining 50% to move up to try and hit your take profit. I hope this is very, very clear. And there is one thing I learned: you can never ever go broke by taking profit. If you see 20 pips profit, you take the profit. You see another 20 pips profit, you take part of it. You can never ever go broke. It is when after you have taken your profit or close your order, that is when the money, the profits you are seeing become yours. If you are yet to close that trade, the profit or loss you are currently seeing is not yours until you close that trade. All right, either your trade closed through take profit or you close it manually, guys. So this is very, very important. Believe me, all of these things, uh, if you put them to work, they are going to help you a lot. You can never ever go broke taking profit. That is one of the things that is very, very important in trade management. All right. And you need to take some responsibility. If you have taken a trade based on 1 hour, try take some responsibility by looking at that trade at least once in every hour, or minimum 2 hours, once in 2 hours minimum. All right. If you have taken 4 hours trade, ensure you monitor that trade every 4 hours. So this way you can be sure that price still has this tendency to keep going in your direction, so that you can be able to uh, let it run, or probably cut it short if you spot some reversal, or you feel price is not going to keep going in that direction. This is one of the things that is very, very important. You may analyze, you may be a good analyst. Believe me, if your trade management is poor, it's going to render your analysis useless. That's one of the things. During this between Thursday and Friday, Euro Euro USD, Euro JPY, AUD USD, we've been able to spot a good trade on harmonic scanner, but those trades did not travel very, very fast before the reversal. But due to trade management, we were able to pick in some trade at some profit along the line before the reversal happens, and we saw USD keep skyrocketing to the upside. Okay, so that is why trade management is very, very important. If you are good in trading and you don't know money management, believe me, you do not know about trade management, it's going to affect you on the long run. So you want to put all of these things into consideration. We still have 2 or 3 more to list in support, but these are the 5 key ones you need to put into consideration, guys. So if this aspect is super clear to those of you on the call right now, please let me know by typing in yes in the chat. Let me know by putting in yes in the chat. And for those of you who are joining, if today is your first time, type in first. If today is the first time you'll be joining our Sunday's class, type in first. So guys, still waiting for your response. If today is your first time, type in first. Okay, assume those who have just joined this class, we do not have any new person on the call right now. All right. So guys, oh, somebody said first. Okay, Uju, thank you. We appreciate you and we welcome you to the class. This is where we have our Sunday's trading every Sunday, and here we pick random subject based on forex, and very soon we're going to extend this to crypto. Very, very soon we're going to extend this to crypto. So, but for now, we still based on forex. This is where we can learn a lot, and the value we give right here is even more than a lot of paid class you can find around. Although we also have a paid class, but the value we give right here has been a lot of benefit to a lot of people. So if you are here to join our YouTube channel, so feel free to go right here. This is our YouTube channel. Ensure you subscribe and click the bell icon. So we have a bunch of videos you can learn from, and trust me and believe me, this is going to help you a lot. All right. Okay, so guys, let's keep moving. Time is not on our side. So for Mrs. Uju, don't let me forget to tell you that this is where we hold this every Sunday, 8 p.m. Nigerian time. So this is 3 p.m. Eastern Standard Time, 7 p.m. London time. 7 p.m. Ghana time. So you want to be here, you want to mark your calendar, set your alarm, and be here every Sunday. And trust me, you'll be happy to spare some time to learn. So let's keep moving, guys. So let's keep moving. So I'm very, very sure this is very, very clear. This aspect is clear when it comes to trade management. So we're going to go into the charts shortly, but under 5 minutes, let's talk about exit rule. Okay. Exit rule. So I will only share two things with us right here, which are very, very powerful. Right. Number one, exit rule we want to talk about tonight is take profits. Take profit, all right? Take profit. And the second one I want to discuss right here is candlestick pattern. All right? Candlestick pattern. Candlestick reversal pattern. Okay, so we have take profit, we have candlestick reversal pattern. So guys, these two things are very, very powerful. For you to go into a trade, as you define your stop loss, same way you must define what is going to be your exit rule. Stop loss is to be able to cut your loss short in order for you not to blow your account. Same way you want to know, when am I going to get out of this market? When am I supposed to get out? What are the things I want to see? Am I going to use take profit? Am I going to wait for candlestick reversal pattern? Right? And believe me, you can execute these two exit rules within a trade. You can execute both of them. So as you define your stop loss, you must define your take profit. So if your stop loss is 20 pips and your strategy says you should use 20 pips, or your strategy says you should use 50 pips or 100 pips, or depending on your experience about the market. So once you define your stop loss, your take profit, that is your number one exit rule. You must be able to know when you want to go, when you want to exit the market. All right? You must be able to know when you want to exit the market. So you must be able to define your take profit. That is very, very paramount. All right? Now, the second one I'm going to talk about right here is candlestick reversal pattern. All right? Candlestick reversal pattern. This reveals to you and I if price is not going to keep going in our direction. Now let me try to draw this out. Let's say this is our entry point, EP, all right, and this is our take profit, TP, and this is the current price, CP. Okay, at this current price, if we spot a reversal pattern, a candlestick reversal pattern, telling us that price is ready to reverse and is not going to go up again, we can exit right here, taking the profit before market comes back and take it up from us again. So the candlestick pattern tells you that price does not have the strength, does not have the momentum to keep going up again. So the candlestick pattern tells you to take some profits or to close all your trade order right there, because it's not likely to keep going in your direction again. And what are the type of candlestick pattern to look out for? Guys, write this down. Number one candlestick pattern we want to look out for is uh, a reversal candlestick pattern like engulfing candlestick pattern, pin bar, or in the case of all trend, you want to look for a bearish uh, engulfing candlestick pattern. You want to look for a pin bar. You want to see an inside bar. So there are several candlestick patterns you can look out for, you can learn from to know when price is likely not going to keep going in your favor. So once you know all this type of candlestick pattern, once you spot, you take a look at your chart and you're able to recognize it, you'll be able to know the decision to take. So that's why I tell our students, the more you learn, the more you know, and the more you stay in the know, the more it's going to be beneficial to you. So that's why I said learning a long time in this business is the key. Believe me and trust my word, I have come far and wide to know what works and what does not work. You will see a lot of traders coming learning this, and within 3 months, believe me, they will learn the necessary thing the right way, and they will start using it. And along the line, probably 3 months thereafter, you see that they start depreciating from that, and their success becomes we start going down gradually. Why is that? My experience tells me that is because they did not stay in the learning environment of that particular training for a very long time. That is why it will be easy to for the knowledge to leave them. But when you stay in the learning for minimum of 6 months, 7 months, you keep learning, although you know what you've learned, but you keep saying the same thing, keep learning, keep staying in the same environment. Believe me, it's going to be part of you forever. Once we are able to stay in the learning environment for at least 6 months, 7 months, 1 year, and even more. Till today, I still keep learning. Despite the fact that I know a lot of things, and I take a lot of people, I have a lot of students, I trade, I make money, do this, I make money when it comes to online. So, but I still keep investing in learning. Why am I doing that? Because I want my knowledge to keep growing. And this market is diverse. You can never ever say new thing may come up at any point in time. Then you'll be able to know how to approach the market. You trade according to what market throws at you, not what you really want. That is what is killing a lot of people. A lot of people want to trade what they want. They don't want to trade what market is presenting to them. So learning candlestick pattern is one of the key things you want to see. You want to learn, and whenever you see it, you'll be able to know what the market is telling you. So when you are able to spot candlestick reversal pattern, once price is already going in your favor, then you can make your decision either to close all the trading profit or to close part profit and allow the rest to run. All right. So exit through is very, very important. So if you want to learn about candlestick pattern, I think we have some videos about that, but not as detailed as it should be, because this takes candlestick pattern. In fact, that is over 3 months course alone. If you want to take it from beginning to the end, it's over 3 months, and we have an ebook for that where we give to our students. So that is the beginning and the end of candlestick pattern. So there's no way you will learn from that ebook and master it that you'll be lacking behind when it comes to candlestick pattern. All right, I hope this is very, very clear. So candlestick pattern, take profit, these are the two important things you want to learn when it comes to exit through. So if this is super clear to you guys, please let me know before we take 10 minutes to go into the chart to analyze this one after the other. taking 1 minute for each of them. So if this is very, very clear, let me know by typing in clear in the chat, guys. Let me know by typing clear in the chat. All right, Mr. James, super happy this is clear to you. I want to hear from others, guys. I want to hear from others to know if this is very, very clear. Okay, Dami, thank you so much for your response. Still waiting for others. All right. Okay. Okay, so let's take this one after the other. Let's talk about stop loss first. So I'm going to take 1 minute to analyze this because I presume you guys are super familiar with all of these things. But trust me, it is not all about you. You've heard about it, but believe me, each time you keep taking the lecture about a particular thing, you get to discover something new about that thing. That is just the logic. But a lot of people, a lot of students don't know. They will say, okay, Shebi, I know it now. I know what stop loss is all about. So there might be some hidden secret that you probably may not have heard from someone in the past. So you may take that opportunity to, to learn and grab that aspect. That is just it. So let's talk about stop loss. Stop loss is simply this. Let's say this is your entry point. Let's say this is your entry point, right? Let's say this is your entry point right here. Okay, this is your entry point. Okay, and this is your stop loss. So in the case of buy, you want to put in your stop loss below your entry point. All right, and in the case of sell, you want to put in your stop loss above your entry point. So this is your, let's say this is your entry point. Okay, in the case of sell, so your stop loss will be above. All right, in the case of buy, let's say market is dropping in this case. Okay, this is going to be your stop loss SL. All right, this is going to be your entry points. All right, so I hope this is very, very clear. So you must be able to define your stop loss. All right, so put that into consideration. Do not go into a trade without knowing what your stop loss is going to be. All right, I hope this is very, very clear. I've been able to explain this very well to you guys, but we're just putting it into practical under 1 minute for each of them. Now let's talk about break even. I'm going to use buy entry alone to explain all of this, guys. I'm going to use buy entry. So now let's assume market is pushing up. All right, market is pushing up, going up right here, and this is our entry point. Entry, let me try to write it out. Entry point, this is our stop loss SL. Now this is it, guys. We have entered the trade right now, and let's say price, this is where the current price is right now. This is where the current price is right now. Okay, CP, current price, CP. Now, how do we break even? Let's say this is the number of the stop loss, right? You want to change the number, this number right here, you want to change it. Change it to this very number, this entry point number. So by moving this number from here, from this lower number up to this one, all right, on the same number, means break even. Okay, it means this is where price is right now. If price now reverses down back to this place, okay, it will not eat you out in break even, which means you do not lose anything. And you never can tell. Price may drop right from this area, this current price, drop down to this place, and even go lower to where you previously have your stop loss, and even go lower. So now, let's even say your stop loss is here. Price has traveled far away from your entry price. It has given you some profit. And now you did not even break even. You did not break even by moving this one to this one. And now price now reverse back into your entry and even go as lower to eat you out in stop loss. That means you are a bad trader. You don't know what you are doing. Your trade management is bad. All right. So any trader that has secured ratio 1-to-1, what do I mean by that? Which means price has traveled the equivalent number of your stop loss, and you still allow price to reverse to come back and eat you out in stop loss, not even in break even, in stop loss. It means you're not worthy to be a trader. I hope this is super clear, guys. So now, if you have moved your your stop loss to break even to your entry point, if price now comes back and hits you out, it means you did not lose, you did not gain. That is even far, far better than you allowing this price to come down and now hit you out in stop loss. I hope this is very, very clear, guys. So put all of this into super consideration. Break even is very, very important. All right. So that is why you want to keep checking your trade at least every 1 hour. If your entry is 1 hour or below, keep checking it every 1 hour. Don't even go lower than not 1 hour, because you turn yourself to a monitoring spirit, monitoring your trade. So you can keep checking every 1 hour, just once in 1 hour, to know what is price doing. That is all. Close it, go do something else. Come back after 1 hour, check. Or you probably set your alarm. Your alarm will tell you, check your trade. Check it. That's not going to take you more than 1 or 2 minutes. You see the current what your trade is doing, then close it. Or probably you use 4 hours. For me, I check every 2 hours, depending on my availability, but I don't go below 1 hour. Okay, I hope this is clear about break even. Now let's talk about protecting some profit. Protecting some profit. So I'm going to put protecting some profit and trailing stop. I'm going to merge the two of them together so that we can move faster, because our time is fast spent already. Our time is fast spent already, because our Sunday training is capped 1 hour, but it's always worthwhile to be here with you guys, even to spend more than what we bargained for, provided you guys understand every aspect of what we teach to you guys. Right? So all these are the normal things a good trader should know. They're the normal thing. The thing you want to keep doing over and over is the analysis. That is the king of them all. All right? So without all of this, your analysis are baseless. You must know how to put all of this into both money management, trade management, every other aspect. So you must learn all of them and master. So let's talk about protecting some profits and trailing stop. Now, I'm going to use this same area. So now let's say this is your entry point as usual, your entry point EP, your stop loss. So now let's say this is where your current price is. Okay, price has gone far as this. All right, it has gone from here to this place, that move in your favor. So now taking some profits, let's say between here and here, you have been able, you are already seeing $200 as your floating profit. Remember, that floating profit is yet not your own until you close the trade. All right. And now this is your final destination. This is where you expect price to come to as your take profit. Okay, this is your TP. Let me use a diagram so it can be easier. This is your TP, current price, all right, entry price, EP, SL. Now, this is it, guys. This is where you are going, and this is the current price. So by seeing that price has moved up to this place, you can just take some profit, close part of the trade. Let's say you have one lot. You have one lot other size. So you can close is 0.5. All right. You can just close the 0.5 lots because you never can tell. Price may choose to keep dropping right from here. So you can close the 0.5 right here and waiting for the remaining 0.5 to come up here to hit your stop, your take profit. And remember, along the line, for price to have moved from here to this place, you must have broken even, which means it becomes risk-free trade. If what I'm sharing with you is making some sense and you guys are enjoying this and it's getting more clearer to you, please type in something in the chat. I want to be sure we are on the same page, guys. I want to be sure. And now, that is how to close some profit, guys. Now, trailing stop. We have several ways of trailing stop. Trailing stop is just like, let's say you already have your break even. Trailing stop is by moving your stop loss, okay, to follow price. Okay, by moving it, let's say price has moved in 20 pips from your stop loss, that has moved in 20 pips, then you break even first. Okay, if price now move from 20 pips from here now to 40 pips, then you move your stop loss from that break even, move it to 20 pips difference between the two, depending on what you want. I'm just using 20 pips as an example, guys. Don't get it twisted. Just using 20 pips. So you have moved your stop loss to this place by trailing stop. So which means the profit between this place and this place is 100% secured for you. Between your entry price and your stop loss is secured. Now let's say price now moved from here, the current price now moved from here to this place, and you see that this distance is much. You move it again. You move your stop loss from its current position, move it higher to any of your desired gap between price and your stop loss. So the profit between your entry and your current stop loss is 101% secure. So as price keep moving, you keep moving your stop loss. Now let's say price is here and you have moved your stop loss to this place. Now you can see price now reverse to hit you out. So now imagine the massive profit you must have taken from here, between here to this place. All right, so that is how to trade stop, guys. And you want to put this into your trade career, right? This is going to help you. This is super important. There are several ways to use trailing stop, all right, by using higher highs or by using moving average. Okay, so we have a video on that. So that will tell you and indicate to you where you want to put in your trailing stop. Okay, this is a low, higher low, the next higher low. As price keep creating low, then you keep putting your stop loss, keep shifting it to the nearest low. I hope this is clear, guys. So trailing stop is super important, guys. So put that into consideration. It's going to help you a lot. All right, what is the next one on the list? The next one is taking 50% profit. All right. Okay. This is also, we can use the same concept. I think this was what I talked about, 50% profit. So taking some profit is also, you can use the same concept for between the same concept for number 5. You can use it for number 3. All right. But protecting some profit is when you have some of them. When you have, let's say, price, this is where current price is, guys. We have our current price here right now. And here is our stop loss, entry point, current price, stop loss. Now, price has moved to this place. Just protect some profit. Let's say you are super busy, protect some profit and leave it. And leave it. Maybe you are double sure that price is going to get to this place. So just protect some profit and leave it. Let price do its zigzag. You believe, based on your analysis, that price is going to get up here. So just protect some profit without using trailing stop, right? But once you have all of this knowledge, you will be able to know which one of them to adopt at a particular time. But trust me, break even is very, very important. All right. Taking some profit is also important. Trailing stop is also important. But you may combine one or two of these together in a trade. And believe me, it's going to help you. So there's none of them that you apply that is not going to help you. But break even is super, super, super important after stop loss. All right. I hope this is very, very clear, guys. Okay. All right. So now let's talk about exit through. Let's talk about exit through. I have 5 more minutes to spend with you guys. Our time is fast spent. We have used more than what we bargained for, but that is very, very okay with me, provided you guys gain some value. Okay, now I want to talk about take profit. So take profit is very, very simple. So this is your entry. I'm going to use the same concept. Let's say this is your entry. This is your take profit. TP, EP, entry point. All right. Now this is it. For you to even go into this trade, as you are going into this trade, it is super, super important for you to know where you want to put in your take profit. Do you want to put your take profit somewhere here? Do you want to put it here, or is it up here? You must know where you want to put your take profit. Either your strategy will tell you use 30 pips, because we have some strategy with their predefined take profit. Some will say 20 pips, some will say 30 pips, some may say 50, some may say 100. Okay, some may say use the last high as your take profit, depending on your knowledge or your take profit. So you must be able to know where you want to put in your take profit. That is very, very important. So as you are putting your stop loss, also put in your take profit, because you never can tell. Price may travel immediately you enter your trade. Price may rise rapidly to hit your your take profit. And if you are selling, price may drop rapidly to hit your take profit. I hope this is super clear, guys. All right. So now let's talk about candlestick reversal pattern. Now along this way, guys. Okay, let me clear all of this. Now along this way, let's say price has traveled up to this place, this area right here. So how can you be sure that a big reversal is coming? A big reversal is coming. We have just mentioned to exit through. We talked about take profit, and now we'll talk about candlestick pattern. The third one I want to give you as bonus is when price reaches the last high or the last low in the case of sell. But in the case of buy, when price reaches the last high. Okay. Now, let's make use of this area. I'm looking for a perfect one right here. Okay, let's make use of this small area right here. Now look at, you will agree with me around this place that after you have entered your trade right here, price went up to this place. Okay, now as once price got to this place, we have the candlestick reversal pattern. What is the candlestick reversal pattern? If you know, please type it in the chat. What is this candlestick reversal pattern? A mother and a baby. A mother and a baby. If you know, please put it in the chat. Under a few seconds, please. A mother and a baby, this green candle and this very one. If you know, type it in the chat. Type it in the chat. Type it in the chat. You see, this is what mentorship is all about. It's all about asking you questions. It's all about giving you assignments. It's all about doing it together. So once we do this together, we work together, we put everything together. Before you know it, it becomes part of you, and you'll be able to use this effectively on your own. That is just it. That is just it. Okay, nobody knows. This is inside back candlestick pattern, a reversal candlestick pattern. When you have a mother and a baby, a preceding candle is going to be the mother, and the last candle is going to be the baby. All right, so this is known as inside back candlestick pattern. So this is also a reversal pattern, and this is used sometimes as continuation pattern. All right, but in the case of an uptrend like this, now after this candlestick pattern, the appearance of this red candlestick, which confirms this move to us. So you can see what now happened right after that: a reversal, a drop before the move now continue. So you never can tell. Market may choose to reverse from here and come down immediately, and come down and change direction. So the candlestick pattern right here tells you that, hey, look at, price is ready to reverse. All right. So like I said, the more you learn, the more you know. The more you stay in the learning environment, the more it becomes part of you. So someone like me, if I should spot this type of candlestick pattern right around here, I know it's most likely not going to drop further for a long time before the continuation to the upside is going to happen. All right. But once you spot something like this, it may give you an hint to protect some profits. This may give you an hint to protect some profits, or take all the profit right here. Banking all the profit. Remember, you can never ever go broke taking profits. I hope this is clear. So candlestick pattern is one of the key points right here. And you also want to spot, this is not a perfect engulfing candlestick pattern. All right, it's not a perfect bearish engulfing. So you want to see an engulfing candlestick telling you that price is ready to reverse. All right, I hope this is clear. So once you learn more about candlestick pattern, you will understand all of this perfectly well. Then you can match all these things together and becomes more powerful for you. And over time, you discover that you become a good professional trader. All right, remember, nobody brought this from heaven. It is the time you invest into this that is going to pay you off. All right, and one thing I'll keep saying is, the more quality time you spend with this, the more it's going to reward you as time goes on, and you want to stay in the learning environment. And it's not all about learning from different people. It's going to get you confused. Trust me, I've been in that show before, where I learned from different people, watch different videos. At the end of the day, I just found myself one thing. I couldn't, make use of all of them. So you want to stay with someone you feel comfortable with, right? and keep learning, keep learning, keep learning, either paid or free, depending on your choice. All right, but all right, thank you so much, guys, for having me today. If all what you've learned today is super clear and you've gained some value, type in value in the chat. And if you have any question, let's have it under 2 minutes. Under 2 minutes, under 2 minutes. If you have any question, type it in the chat. If you do not have it, type in no. If you have any question, type it in the chat. No question, type in no. You either type in your question or no. I want to be sure you guys are okay, and this is life has been impacted with this class. Close to 1 hour class, 1 hour 30 minutes class, and I'm super excited to be with you guys tonight. Still waiting for others to put in some comments in the chat. As usual, no question. Thank you so much. As usual, you guys, I assume you guys, if you want to do us the favor, just type in what you've learned on. This is what we request from you guys. You're not paying for this service, you're giving to you free of charge. We only request you to go on our Telegram group, put in any comment you feel like putting concerning this Sunday class, so that we can just help others to be here and learn something good. We feel like sharing more with you guys, but you can only encourage us by putting in the comments, either good or bad comment. Let's put it on the group. If it's a negative comment, it's going to help us. It's going to help you in return for us to be able to sit up and try to reshape things. Then it's going to help you on the long run. But eventually, last week we requested for this, and we had over 7 or 8 people on the call. Nobody put in the comments, so no qualms. Probably maybe we should just end and stop putting Sunday's training on the chat if no response is coming from all of you guys. Okay, because this is more than what a lot of people are paying for out there. We know, because we've been there, done that, and we do see a lot as well. So thank you so much, guys, for being here. I appreciate you, and I appreciate you once again for being here. I wish you success in your trading career during this coming week. So let's see again next week, Sunday. Thank you so much. Bye bye for now, and God bless.